You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Marchese, mining analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, Chris.
Great to be back, Jim.
You're just going over the latest economic data from the Fed. What can you tell us about it?
Just that, nothing's improved, even though they love to say, the economy's recovering, this and that. And, yeah, they talk about raising interest rates. But there's no chance that's going to happen next year. And even if it was going to happen, if they raised them to even 1.5%, the Fed funds rate to 1.5%, which is historically very low, the economy would completely, collapse upon itself. We're so levered to interest rates, especially when you account for all the size of the derivatives market in interest rates, and the fact that there's still a lot of adjustable rate mortgages out there. That'll just cause another 2008, but worse. And the fact that they ended QE, that alone will send us into an official recession after a few months. Bad economic data has been coming out in November. I think the manufacturing sector lost momentum according to the PMI, and that should continue. There's no reason why it wouldn't. So, I think the Fed will use the excuse in 2015, inflation's too low or something like that, and because Japan and the EU are in a recession, it will impact us. So, they have a lot of ways to just delay it while still getting people to think that they'll raise it in the near future.
And of course, the Arctic vortex or polar vortex or Arctic blast, whatever they're calling it, that's had a dramatic effect on housing starts in the U.S. right now. Yeah,
that has contracted for October, and then everything was revised, I think, October and September, including that, industrial production, auto production. So there'll be adjustments to inventory, which artificially increase the initial estimate of Q3 GDP. So I don't see any way how the second revision, which will be released, or the first revision, which will be released on the 30th, won't be revised lower.
What's been the American reaction to Japan calling a snap election just 2 years into the Prime Minister's mandate?
Not much over here. Everything's focused on Japan's, it's just not talked about that much over here. But it is odd, and, at first everyone was saying, Abenomics worked, just like, and it was the same as QE. And yeah, sure, it works for a while, but then you have to pay the price later, and that's what's happened there and is in the process of happening here.
We'll have more with Chris Marchese right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. My guest is Chris Marchese, mining analyst for the Morgan Report. Chris, I saw some economic data that says for every 1 cent a gallon drop in the price of gasoline in the U.S., that puts another $1 billion back into the hands of consumers. So, for example, if the price of gasoline went down 65 cents a gallon, that's an extra $65 billion to pump into an economy that does, of course, rely on consumers. Have you seen a big drop in the price of gasoline in the San Francisco area?
No, not at all, and it won't drop. Gasoline just, it's not like it was, say, back in the mid-2000s where there was a strong corollary with oil prices, especially after, the U.S. introduced the ethanol. I guess you would call it a tax because it costs more and 10% of our gasoline must be ethanol. So you got that, other taxes on gas. So it's gone down a bit, but I don't think it'll impact anything that materially.
Frankfurt has started trading the Yuan. They have a trading center there, and Canada just signed an agreement to open up Yuan trading centers in Vancouver and Toronto. Any talk about that in the U.S.?
Yeah, but you can't look, in the mainstream, of course, because this all circumvents the U.S. dollar, and in the medium and long run, it'll cause the dollar to get weaker and weaker and weaker. So, it's great that's happening, because why should the U.S. dollar be the reserve currency? Look how bad a shape it is. It's strong versus other currencies, but, it's still horrible. The fundamentals are horrible. It depreciates, far faster than the government reports. So, hopefully the Chinese will the Yuan RMB convertible, fully convertible, back it by real assets, and that'll become the reserve currency.
Well, you were the first one to point out that China for the last few years has been snapping up every physical piece of gold they can lay their hands on. Would a gold-backed yuan help replace the U.S. dollar? Oh, yeah, big time. If they announce that, it takes some time just to be convertible first, then you back it. But it'll just destroy the U.S. dollar. Who would you, the average person, would they trust a piece of paper that's worth nothing, whereas a piece of paper that's convertible to specie, silver and or gold, that has intrinsic value behind it? There's no question what would happen. And I think that's China's longer-term plans. And as it looks right now, they might be planning to do it with, say, Russia, who's been buying a lot of gold recently, and even India. Well, they always talk about the BRIC countries, Brazil, Russia, India, China. This is part of their strategy, I guess. And even, the first step of this could be with the Swiss if the referendum passes. Because we talked recently about even Greenspan saying gold is the ultimate currency. So, I was really surprised it didn't have a bigger impact on the price, given how impactful his words have been and were, especially when he was chairman of the Fed. So, it's just a matter of time. And if you wanted to stock up on gold, what better time than now when we have prices that are at a 10-year low? Yeah, and they're well below the all-in cost of production in terms of the industry. And silver is only the lowest 15% of primary producers are profitable at this level. So, of course, a lot of them are just going to shut down and tell everybody to take a holiday until the prices go up. And when it happens, I'm told, once prices for gold and silver start an upward rise, they're expected to not just go up gradually, but be a huge spike upwards. Oh, yeah, I expect when we go through the breakdown level, at least in silver, of $26 an ounce, will not only pass 50 in short order, but, go make its way into the 70s. And the same with gold. Once it can convincingly pass 2,000, I would say 3,000 and 4,000, would be there in a rather short period of time. Chris, thanks a lot for chatting with us. My pleasure. My guest has been Chris Marchese, mining analyst for the Morgan Report, which you can check out online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. You can forward comments about the show to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.